OPEC has approved the biggest output cut ever, and growing evidence of a global recession continues to take a heavy toll on the oil business. OPEC has agreed to cut 2.2 million barrels from its daily production, its single largest cut ever. I hope we surprised you, the OPEC president said, when asked whether the size of the cut would shock moribund oil markets into an upward trend. And he said, if you're not surprised, we need to do something about it. And yet, oil markets weren't impressed at all. Crude oil sank to $40.20 after the announcement, a level not seen since the summer of 2004, and a clear sign investors are more worried that the world is heading for a very long and painful recession in which energy use will continue to erode. So then, in just 5 months, crude oil has given up all the price gains made over the past 4 years, and then some. And making matters worse for OPEC, Moscow has distanced itself from direct ties with the 13-nation producers group, further dampening OPEC hopes of coordinated production cuts that might possibly put a floor under crude oil prices. In other words, it's about greed, pure greed. That's why they can't really decide, because there's always going to be another country to undercut them. Or, OPEC said oil ministers of the 11 nations under the group's quota system have agreed to take 4.2 million barrels a day off the market. But that includes 2 previous announced cuts that totaled 2 million barrels. That leaves the new output reduction announced Wednesday at 2.2 million barrels, effective January 1st. Still though, even the record cut was unable to counterbalance consumers' concerns about the dismal world economy. In the U.S., the world's largest crude oil consumer, the Federal Reserve's decision to slash its target interest rate to nearly zero buoyed global stock markets Tuesday and early Wednesday. But then again, the news on the U.S. economy is expected to get worse. Businesses, which have already cut approximately 2 million jobs since January, keep laying off workers in the face of lessening demand. The government reported Tuesday before the Fed rate announcement that home builders cut production in November by 18.9%. That's quite a bit. The biggest drop in nearly a quarter century. So that in turn pushed activity down to a record low annual rate of 625,000 units, as the woes or troubles in the property market, where the current economic troubles began, showed no signs of abating or letting up. Focusing on the shrinking oil market, OPEC noted in a statement that crude oil volumes entering the market remain well in excess of actual demand, and moreover, the impact of the serious global economic downturn has led to a destruction of demand, resulting in unprecedented downward pressure being exerted on prices. The group said, if unchecked, prices could fall to levels which would place in serious jeopardy the investments required to guarantee adequate energy supplies in the medium to long term. So in other words, they only have enough oil for the short term, and that's not good. That means if the price of crude oil falls too low, then they won't put any money back into finding any more new oil, or even purchasing any more drilling rigs, or even alternative energies. They won't invest any of the money. At some point, they'll actually start losing money, because these countries have balanced their budgets on the price of oil being higher than it is now. In addition to signaling signaling that a major cut was in the offing in the days leading up to the Iran conference. OPEC ministers had expressed hope that Russia, the number 2 producer after Saudi Arabia, would join in a significant cutback that would bolster prices. The Russians indicated the reductions had already been implemented in November. Among those hoping for Russia's support was oil powerhouse Saudi Arabia. We also hope that other producers who are not in OPEC will chip in for the purpose of bringing stability to the market. But the problem is, they can't make enough money to balance their governments. That's not a good sign. But with Russian production falling, due in part to lagging investment, it was unclear whether some of the cuts enacted or proposed were simply a way of packaging Russia's inability to keep up present output levels. Russian output, now close to 10 million barrels a day, is expected to decline by at least 1% this year, and even more, around 2% in 2009. That and the fact that Russia was announcing reductions already enacted some time ago diminished the significance of its announcement. The OPEC president sought to cast a positive light on the Russian moves, suggesting that while Russia might rethink membership, it was a sovereign country that can cut maybe more strongly or less strongly, or maybe do nothing at all. We could not tell them, what to cut and how to cut and when to cut. They have to make their own decisions. But he said the Russians could become members sometime in the future. Well, that is putting a positive light on it. Industrial production in Russia, Brazil, and other resource plays is likewise plunged, along with a global demand for basic materials like fertilizers and steel. And China's economic growth rate has fallen from 12 to 9% in the third quarter, the slowest pace in 5 years. China's steel output in October fell 17% year over year, and the country has ceased gasoline imports altogether and cut its diesel imports in half. And reports of factories closing continue to come out daily and increasing. And accordingly, a slew of financial forecasters have downwardly revised their oil price targets. Merrill Lynch has slashed the forecast to $25 for 2009 as the global contagion extended to China. Well, that means they're not going to have enough money to reinvest the oil profits into anything, because they won't be hardly making enough to even produce the oil in a lot of countries. Well, that is the way peak oil happens too, whether the price is too low or too high. In fact, if the price is too low for a barrel of oil, it can happen even sooner. That means they'll only pump, or they'll only extract the oil out of the ground, but they're already extracting, and once those fields go dry, that's it. So they won't be making enough money. In an effort to support prices, well, they've announced these things, but will it hold? Will this all hold? No, people are getting desperate for money. Around the world, all nations are getting desperate for money, because they've expected that they'd have a lot more money coming in than they do now. And on top of that, on top of all this, there's more to this story. Everything is connected. The worldwide economies, the climate, the weather, all the happenings around the world. And all these are connected to the end times, transition days. And though there are a lot of signs, many, many signs, they're all around.